Hi, it is November 10, 2023, and you're watching Awesome 10X, and this is Nikki Yu as your host for this Free Friday class. Let's begin. As you can see from the title, Nasdaq winning streak ending. So, we're actually reviewing charts today, and we're going to try to come up with a conclusion just by looking at the charts. It looks as though, even if there are good earnings that came out this week, such as Disney last night doing well due to a lot of cost cutting mode, there seems to be a lot of selling pressure that's happening actually underneath a lot of other stocks such as Robinhood falling down. You've got Upstart falling down, and even if a firm actually did very well, it was actually sold off. So let's take a look at a few charts: the S&P 500 as usual, the Nasdaq, and your Russell 2000, which has actually been dropping last night and the 2 days ago. Okay, so let's go through the charts. Okay. Okay, so let's begin with the charts. I think it's important for us to look at the S&P 500. Okay, so far the S&P 500, as you can see, sharply fell at the 435 zone, nearing the 4,400 zone. The recent high was 438, and then it dropped last night to 434, and that is actually a bearish engulfing close for the S&P 500. Take a look at the QQQ as well. The QQQ also started falling after a topish area here at about 375 to 380. So far, we are still seeing that the Nasdaq is unable to break the new highs, and it's actually still actually lower. You've got a capped sideways drop. That's your QQQ. Let's take a look at your Dow Jones. It also fell down. Your Dow Jones actually is also falling down last night from a high of 342. It closed to about 339. So those are 1% drops. More importantly, guys, take a look at your Russell 2000, which are your small companies. It massively broke down, selling off from 172 to 167. Take note, weak is still becoming weaker. And furthermore, your microcap, which is your IWC, has also gone down from 100 to 93. In fact, a lot of very weak stocks last night further sold off to new lows. In particular, Frey Battery, Freyer actually dropping 20%, as you can see last night, to new lows. Actually, there's more new lows as time goes by, especially for small companies. So although your Apple is still strong here at about $180, take note that the downtrend seems to be intact and the bears are not really out of the woods. In fact, the bears are somehow already starting to go out of their caves and start selling here at about 184, 183. That's your Apple. Microsoft has been strong, but it is also at the double top here at about 365. Take note about those lines. Here about 366, it was quite a double top for your Microsoft. And then Tesla was actually downgraded last night. Tesla is now actually dropping below the $220 zone. Take note that this was not a gap fill. It was just a gap towards the previous gap down here about 230. And Tesla is actually showing weakness here. Furthermore, as you can see for most Chinese companies, especially the A shares, weak becoming weaker, your A shares are going down. You've got Alibaba falling down. So the weak companies are still weak. Chinese valuations are compelling, but it's still not being bought up. Just like microcaps are still being sold off. Take note what happened today on Hang Seng Index. After hitting 18,000 just a couple of days ago, it was sold off and it's now trading at 17,200, barely hanging on to any of its gains. So it seems, guys, that there is a lot of fizzling out of a lot of the gains. Yes, we've seen some companies do well, but note that it was also sold off. Take note that companies like a firm, after hitting as high as 20%, what you can see with the candle last night was actually a sell-off. It looks like actually a topish area. From $27, it sold off towards $24, and it looks to be opening at the 25 below for tonight, showing that there is still a lot of profit taking even on good news. Perhaps a lot of people are actually taking the chance this month to actually continue selling off. Look at your Google. It's also being sold off here at 133, closing towards 131. Let's take a look at your Netflix. After hitting 440s, it's also being sold off here. It was a bounce on good earnings, but it's now actually getting some fatigue. Take note on your Meta at about $320. It's just pausing here at $320. You're seeing Amazon also pausing here at 140 plus dollars. So you're seeing actually the market staying rejecting your current resistances. Now you've got companies like CellH did well, but look at the noticeable trend. Even the good news is actually having a hard time also rallying. So companies that rallied are being sold off. Recently, Roblox actually did well, but also being sold off. Take note from 42, Roblox was sold off back towards 37. Take a look at what happened to Roku after a 30% rise. From about 55, it rose to about 85, and it's just sleeping there today. This flag may actually be a price that people are already taking profits from. So we're actually seeing, guys, a lot of profit taking. And I think that a lot of people are also taking a look at your ARC names, and it's actually showing that weakness. So as you can see, weakness in ARC actually stopped at the 200-day moving average here, about $40. And we were seeing about a week and 2 weeks ago that it looks like the bears are still in control. And there was a difference, what a difference a week makes. But this week, after that very strong week last week, it sure looks like we're already consolidating. Just a matter of a few companies earning and doing well. And as you can see, most of the companies that are doing well is doing a lot of cost cutting. So I think what's important to notice, yes, Disney did well because of a lot of cost cutting, but Disney is just actually below the 200-day moving average here at about 92, suggesting that the bears are still there with a lot of resistance further here at 102. Notice companies like Starbucks, which did well, Starbucks and Apple. Starbucks here is actually having a hard time here at 105, and last night it already started showing weakness. From 105, it started closing it at 102. Take note, you have weakness in China. Yum China was actually a gap down here, and considering that drop, it continues to sell off. So you're seeing actually a lot of weakness. Also for the crypto people, yes, BTC USD has been going up, now trading at about 36, 37,000. However, that is the previous support that could turn into a resistance here for Bitcoin. And you're seeing actually that people are starting to take profits. Take note of the movement of MicroStrategy after hitting 525. There seems to be some sense of profit taking here for MicroStrategy. A lot of selling pressure as well for Coinbase, even here at 99 to 100. So be a little bit careful because these seem to be a fake breakout, just like what happened when the S&P 500 fell below 420, which is also a fake breakdown. So far, what we're seeing, guys, is a lot of neutrality. Neutrality meaning at oversold zones, people are buying, but at overbought zones, people are also selling, which is a mark of a neutral range. We're actually more or less in a neutral range. Let's take a look at the movements. Let me show to you. Upwork actually rallied, but note the movement after rallying from 10 to as high as 14, it still is getting clobbered at 15 and in fact was sold off at 13.34. How about your favorite name, which is a lot of people are favorite on Nvidia? Take note that last night Nvidia also didn't rally further to 520, but actually started dropping here at 485, showing a little bit of profit taking already in the semiconductor zone. Nvidia is doing like that. AMD also getting profit taken here at 115. Take note that the movement of Taiwan Semiconductor TSM here at about 94, you're getting some resistance. Let's take a look at Avgo, which is your Broadcom. So most of them, as you can see very clearly, top here, double top, triple top, quadruple top, quintuple top for Broadcom here at about 925 zone. Let's take a look at further other semiconductor stocks. ASML having a hard time here at 200-day moving average. ACMR Research actually is still below $15. So it fell to $14, rallied to 18, still dropped here at 16. So you're seeing actually that ACMR is unable to break above 22, which is still way below the previous highs in 2021. So it's not an easy V-shaped reversal. even if semiconductors as a whole is being fueled by your NVIDIA. Okay, let's take a look further. Stock movements, no? How about the entire retail sector? Okay, for the retail sector, you've got Elf Beauty, which did well, but was actually being sold off. Take note that Elf Beauty, after topping here at about 140, is still slowly selling off below 110. And yes, we saw resilience on Nike, but Nike is also getting sold off here at about 111. So just like Nike and Starbucks, good earnings but being sold off here, the 200-day moving average, we do expect that people would still be cautious on consumer discretionary spending, such as XLY having a hard time here at about 165 and selling off last night at about 158. It's very clear that the people are still actually having a hard time with the evidence being shown with credit card spending going towards buy now, pay later modes, no? Buy now, pay later modes like Affirm also profiting, but there's actually a sell off last night after hitting 20% intraday. Roblox also had a sell off even after so there's a lot of take profit on good news that we are seeing. At the same time, all the bad numbers are getting sold off in a massive manner to new lows. Take note, Toast is selling off to new lows. You've got a lot of companies in the biotech arena selling off to new lows. LabVIEW is actually going down all the way down. No? So anyone who's been buying a biotech is getting killed all the way down. So far, the only good moves actually happened towards payment firms, wherein Square, after dropping to $40, rallied to 50, and it still have upside towards 59 to 65. You've got companies like Coinbase who rallied, of course. You've got crypto names who rallied. But again, you can see that there's still a strong downtrend on fintech names, and they could be just rallies towards overbought zones, from oversold to overbought, which is just a mean reversion play. Similarly, if you noticed, a lot of your e-commerce names, Coupang dropped a lot, no? Coupang is selling off. You've got Shopify is already trading at $61, $62, which is also getting some profit taking. You've got Mercado Libre rallying here towards 1.4 and getting some profit taking as well. If you look at the charts all throughout, we're seeing actually a lot of profit taking, such that our view is the bears are actually in control, especially now in the overbought zones. So be careful out there. We're seeing actually a lot of selling off and patterns that are suggesting rejections of resistance. Let's look at it on more terms. Yes, this week it was predominantly upsides for Datadog. But notice after that gap up for Datadog, which happened because of a 30-20% drop in the prior earnings, we note that these rallies on software names are more or less mean reversion plays. No? So Datadog was more of a mean reversion play. MongoDB, which rallied due to the earnings of Datadog, seems to still be in a downtrend here on a bigger pullback basis. Healthy, but actually lower high. Look at the movement of the trade desk last night. Programmatic advertising fell down here at a downtrend. And pre-market, it's actually dropping catastrophically from $70, $80 to as low as $56 later on. So a lot of massive drops on weak numbers. So Datadog, MongoDB, Snowflake, let's show to you the movement. Snowflake is actually a gap up, but still downtrend. So clearly, what we're seeing from the basis of just looking in big companies that have reported this week, majority of the good earnings did gap up, but it's actually selling off and sideways. There's no strength in follow through. At the same time, the companies that did very badly are gapping down 20%, suggesting that downside is more imminent rather than upside. So let's show to you every sector that we're watching. For Bitcoin names, yes, Bitcoin crypto linked names. The strong names have been Coinbase and MicroStrategy, but we note that they're near resistances. A lot of the rest of the mining firms are actually very weak. Riot has been sold off. Mara has been sold off. Take note that it's very weak. Riot is actually still lower from 20 to about 12 and still trading at $10, even if Bitcoin is at 37,000. So we are noticing that while Bitcoin is strong, actually the Bitcoin miners are weak. Riot is weak. Mara is also weak. You can see that sell off. You can see Clean Spark also being sold off. Bitfarm is also being sold off. So a lot of weakness actually on a lot of crypto linked stocks. Only Bitcoin has been the strong one, and even Bitcoin today is at resistance levels as well. Now, so in general, crypto related names are in resistance. Gold stocks are also actually selling off. Gold and commodities, we can see that gold miners didn't follow any rally. Let's show to you gold. So GLD, which is gold, is actually at $1,950, selling off at 2,000. We're actually seeing more of a range for gold. And if you take a look at the largest gold miner in the world, which is Newmont Gold, it's actually weak here, downtrend still. So we're seeing actually a dichotomy where gold and Bitcoin is rallying as an asset class, but the miners at the same time are still slowing off and selling off, even hitting lower lows and lower highs. You can see this one is Newmont Corp, never recovered even as gold prices are still $1,950. It could be an opportunity for those who are value investing in these gold miners, but we're seeing that there is actually a lot of weakness here just from a chart per se. Same thing with silver, it's actually still weak. Silver miners are still weak here. Nobody's buying PAAS, even if silver, let's show to you silver. Silver is actually relatively okay, above $22 here, $22.50. Actually, just sleeping there for silver. Okay, so commodities are actually having some weakness. In terms of energy stocks, we're also seeing weakness in energy. They're in a range, so even if they've got cash flows, we see that XLE spider sector seems to trade in a range bound manner with a lot of buying pressure at 75 and a lot of selling pressure at 93. The biggest component of XLE, which is ExxonMobil, is actually still selling off. You're seeing 118 to 102 when Chevron also bought and acquired companies like Pioneer. Chevron got sold off back to support here about 142, suggesting actually that oil stocks, even with their great cash flows, are not being bought by the market. At the same time, we know this week actually Berkshire Hathaway reported record cash piles. Let's see to it that record cash pile showing to us that Berkshire Hathaway would rather park his money in treasury bills rather than invest in stocks, suggesting stocks are today currently at expensive valuations. Note that Berkshire Hathaway 370, 350, it's actually showing some pullbacks. So we're seeing actually Berkshire Hathaway parking a lot of their money in treasury yields. Let's take a look at your US 10-year treasury yields. It's steady here at about 4.5%, falling down from peaking yields at 5%, but still way above trend, suggesting that many people are still parking their money in government bonds. US 10-year treasury yield still above 4.5, which is an alternative versus buying staples. Look at your consumer staples. Consumer staples are getting buyers here at $66, but getting sold off already quickly at 70, suggesting also a range-bound manner for XLP. Not a lot of people are still wanting to buy Coca-Cola and Pepsi. Let's show you Coca-Cola. Coca-Cola rallied, oversold from 52 to 57, but after a 10% bounce, it looks like the downtrends are still intact for Coca-Cola, even with good numbers due to the valuations. Same thing happening for Pepsi. There's a short-term rebound from about 155 towards 168, but after that 10% rally, it looks like some people are skeptic about paying these staples a high valuation, suggesting maybe people would still further want a cheaper price and higher yields for Pepsi and Coca-Cola. Same thing for Hershey's. It's getting some buyers here at $190 a little bit, but you don't have a clear pattern yet. It could fall further towards 170. Hershey's, McCormick. So let's take a look at these staples. McCormick Spices still having a hard time for a solid support here. It could fall another 10% lower. How about your utilities? Next Era Energy rebounded. Your Next Era Energy, which is the largest component of utilities, here from about 54 rally to 60. Again, after seeing that 10% rebound, it looks like utilities are still in a downtrend and people are still second guessing themselves over the valuations of these stocks. So if you ask me, it looks like if you want to buy staples and utilities, you still have a lot of headwind and headroom out there with your yields still a competition. People would prefer to buy it lower than previous low of 54, I would say for XLU, they would prefer wanting to pay here more at 48 to $49 further. So you still have a lot of downside, at least 10 to 20% downside for utilities. I would wait it out. XLY also has downside. Let's take a look at your companies like CMG. CMG managed to rally all the way towards 2,100 back towards those previous highs. Take note though that in the past earnings, no, it gapped down. Now it just rallied back. Let's see if it actually gets rejected here at 2-1. As most of this sector in the fast food is actually being sold off already due to the valuations. Okay, so last night, a lot of companies that rallied were just short squeezes. Beyond Meat was actually having weak numbers, and rallies last night is just really an oversold rally. From about 6, it rallied to 7.5, and then still selling off. Take note that these stocks are still hitting new lows as of the moment, and we're seeing in general small caps are very, very weak. Let's show to you the movement. So gold and commodities are down. Big tech is showing sell off, signs of selling off and wearing off. Tesla is an indicator of weakness. With Tesla showing weakness, no hope for companies like Ford. Notice that. More new lows for Ford, more new lows for General Motors, more new lows for Rivian and Lucid as well. Let's show to you the movements here. Rivian weak, Lucid also weak. We're seeing weakness, so that we expect XPEV and Li Auto to also be sold off here. XPEV showing downtrends, Li Auto showing potential weakness here, downtrend, and then NEO, which is the weaker one, which is actually hitting near new lows. Okay, so in general, cars as a whole are weak. Tesla is also indicating weakness ahead, cutting prices as well for some, and that was evident in their last quarter deliveries. Okay, let's show to you this. Okay, so big tech having a slowdown, semiconductor showing weakness relatively. You've got watch modes. Okay, Datadog after rallying 20% being sold off. People are also getting skeptical on Shopify after hitting $61, $62. Note that it's actually still in a downtrend. You've got these lower highs, 70, 68, then $60. So we have actually most of the charts, if you take a look, is actually showing to us downtrends. So even if tonight there will be a Fed speak, it looks like the market is already predicting that whatever the Fed says, the market is already finding a reason to sell off even as early as last night. I'm just here to show you the charts. You can see all those reds and all the greens were being sold off. One of those good news that I should share, of course, is Nintendo. Nintendo was actually having a great all-time high for the year after releasing the plans to have Legends of Zelda. Take note though that these are one of those outlier moves. No, Nintendo is still doing well. You have some Japanese stocks still doing well, just like how outlier companies like Microsoft continue to be, or even Nvidia. Then again, even if they are outlier strong, there's actually weakness. Let's show to you what happened to Palantir. Palantir, after rallying 20%, is actually getting some profit taking as well here at about 19 and 18. So AI is actually also being sold off. Take note here, C3 AI is selling off. No, so companies that are very weak from 40s to 30s and perhaps lower than 22 after a few more months. So we're really seeing actually as a whole meme stocks getting sold off, biotech names getting sold off, small caps, SPACs getting sold off, seeing a lot of weakness rather than bullish strength on an individual level. And there's very little buyers actually, and more crowding effect and more short squeezes rather than definitive buyers at the moment. Look at the movements in Comcast, in Warner Brothers. So Comcast was actually selling off after that gap fill, sold off. Take a look at Warner Brothers, sold off 20%. No, see that? New lows for Warner Brothers. So even when you're so underneath the surface of your S&P 500 and your QQQ and your Dow Jones, it looks like, guys, the bears are actually winning. No, so this is your Dow Jones. Take a look at your. Let's take a look as well at in home construction. Although home construction stocks rallied, as you can see for this bounce, it's still at a lower high. So even the strong ones, as we can see, home construction ETF, expanded tech software like IGV ETF, they are at resistances. We're still seeing lower downtrend. At most, we're seeing sideways action. So we would be on the side of caution, and we would be betting more on further downside within the next few days rather than upside. So, yeah, so you can see that very clearly. How about for banks? Let's show to you banks. This is your strongest bank, which is JP Morgan. At most, JP Morgan is just sleeping here sideways, and the KRE, which is your regional banks, are actually falling down. Regional banking is unable to go above 200-day, which suggests the bears are still in control. Notice that weakness and pullback for regional banking stocks. Notice the weakness on companies like Bank of America going down. You've got companies like Citigroup going down. You've got companies like Goldman Sachs sideways to downtrend. No, here downtrend. So in general, no, very weak. We're seeing still weakness on the financial sector. Weakness on the financials, weakness on utilities, very little love on consumer discretionary. We're seeing already that weakness in the market, no? So a lot of reason to be cautious. IGV, which is your expanded tech software, Fiverr getting sold off, Fastly sold off, Atlassian was sold off. Let's show you those charts. Team, TEAM. Team was sold off, no? Atlassian getting sold off. The trade desk sold off. Um, yeah, let's show you the movement. This is your Cloudflare. I'll be cautious on companies like Cloudflare having a hard time here at $66. No, you're seeing in general a lot of downtrends. A lot of these are still unable to break through, and so just like what we shared, the bears are actually still in control, and the resistances today actually give an opportunity for those who are long to actually take profit and probably be on the sideline. Okay. Uh-huh. Solars are very weak. Fast food stocks are weak. Software as a service names are actually at resistances. No, Viva Systems sold off last night. Let's show you those movements just so you are aware. These are the charts. Viva Systems dropping from $190 all the way to 166. While you have some strong names like Visa trading at 245, take note that these strong names are barely hanging on to those gains. Okay, so I think I've said enough. I've shown you enough charts. Whether you are bullish or bearish, I think the evidence is very much telling you to be cautious rather than bullish. No, so let's just let the numbers and the charts speak for themselves. And when the charts are doing the talking, it's very clear that we have to be in the sell side and end the bullish run so far. So topic is Nasdaq winning streak possibly ending. Let's take a look, and that's the charts. Thank you very much. Hope to see you again next week for a weekly market recap. Bye.